Hello guys, it's me, Ellie. Today I'm going to do tutorial letter 102. I'm going to do an example out of there, all prepping us for our accounting exam. Okay, so just get this start letter out. I'm going to do question 3. Okay, question 3, I think it was very good prep for the exam. Okay, so as I work through it, I think I'll put it on this side. I'm not sure if you guys can see it nicely. Yeah, you can. Brilliant. Okay, let's get going. The first question says packaging material on hand at 31 December to the value of 980. Okay, packaging material on hand. So that means we've used it as an expense, but it's actually not an expense. So let's start with this one. Equity equals assets minus liabilities. And we always start with a minus. Minus plus, plus, minus, minus, plus. And we write that on our exam paper so that we cannot get confused. Okay. So here we will have two accounts, packaging material and something else. Okay. Packaging material is an expense. Packaging material. But it is an expense, so this question here says packaging material on hand at 31 December to the value of 980. Now, it's like we bought packaging material already, but we actually didn't use it, so we can use it next year. So it's an expense, and an expense would have been this side because it makes equity less, but it's an expense we did not use. We did not use it. So it's in fact going to make equity go up. So that is the credit side. Credit. The debit account that we're going to use is inventory. Inventory. Okay, inventory. 980. Okay, and then here at the bottom we just write packaging on hand. Okay, so let's have a look at what I did here. At the top I wrote the one that I was going to debit. At the bottom I wrote the one I was going to credit, and here is just a little bit of detail explanation. Okay, inventory is an asset. Okay, inventory. So if we have the debit side on this side and the credit side on this side, we know it's an asset, so it's always a plus on this side and it's a minus on this side when it's an asset. The inventory we did not use mean that the inventory goes up, right? Because we didn't use it, so at the end of the year we still have it. So inventory we're going to write on this side, 980. And then the packaging material, which is an expense that we did not use. So if it was an expense, we would have written it here, but it's actually not an expense because it's expense that's left over. So we're going to credit it on this side. So my credit account was here and my debit account was here, which is what I wrote. Debit, inventory, credit, packaging. This is just another way to write it. It's called the journal entry. It's called journal entry. It's just another way to write it. Okay, the next question. Long-term borrowings was entered into on 1 October. Long-term borrowing, so that's up there somewhere. Let's look for it. Long-term borrowings being limited, 25,000. Now it says here, according to the agreement, interest is payable biannually. Biannually means twice per year. Twice per year, that's biannually. At a rate of 18%. Okay, so interest must be paid at 18%. The amount for the long-term loan is 25,000. So 25,000 times 18% for the year. But a year is 12 months. Okay, so So how many months of those 12 fall into our time period? Our time period is there at the top, 31 December. This one was entered into in October, so it's October, November, December. So 3 months fall in our year. That is recorded here. So the amount of interest, you're going to say 25,000 times 18 times 3 divided by 12, and then you say percent or divided by 100. That will that comes to 1125. Okay, 1125. That's the amount of interest. Now, it's only payable biannually, so we haven't paid it yet, and we are also not supposed to pay it. Okay, it's 1125. We haven't paid it yet because we're only going to pay it biannually, but we have to somewhere in our books mention that we owe this to somebody. Okay, we owe it to somebody. So if we owe it to somebody, it's going to be a liability. And the liability gets more, so that's a credit. So we'll have a debit and we'll have a credit. The liability will get more, so we'll write something here at the credit side. Interest owed, I would guess. Accrued expense, there we go. Okay, accrued expense, 1125. And here is our actual expense, and this is interest payable. Interest payable, interest on loan. Okay, interest on loan. Interest on loan looks like this. And here's the expense, accrued expense. Okay, interest on loan. If we pay interest for a loan, it's an expense. An expense is here by equity, income and expense. Now, will an expense make equity more or less? An expense would make equity less, so it'll be on this side. This side is the debit side. This is why I did the debit one here. The credit side is the liability going up, accrued expense, and then we write here interest payable. Great. Next one. So there's no shortcut for accounting. We'll unfortunately have to just work through every single one of them. It can take hours and hours and hours and hours, but once you have it, you have it. So 2.3. Advertisements include an amount of 400 Rand paid for January 22. Now, January 22 falls out of our financial year. Okay, it's out of our financial year. And in accounting, you must only account for what happened this year. If the expense falls over here, out in the next year, so this is 21, that's 22. If it falls out of this year, it should not be in this year's books. Okay, so it's expense that we've paid already for next year, but we shouldn't have. So if we've paid it, expense paid too early. So expense paid up front, we're going to call that a prepaid expense. Prepaid expense. So first up is the expenses of this year, which was advertisements. Okay, advertisements is an expense, so it will make equity go down on the debit side. But we've already put it in there because it includes an amount of 400. So we've already included it in our expenses, where we shouldn't have because it's only for next year. So we want to take it out. So if it is on that side, we take it out by putting it on the other side. So the other side, the credit side, will be advertisements. The credit side will be advertisements, 400 Rand, and then we can debit prepaid expense. Okay, so just a little bit more detail. If we had advertisement expense for this year, if we had an advertisement expense for this year of 1,000 Rand, then I would have said we have two accounts. Okay, we have to pay the advertisement expense, so that's on this side of bank. That's the credit, so the debit side would have been this side. we would have paid it. Okay, we would have debited to pay it, 1,000 rand. This is just an example, it's not in the question. But now the question says it includes an amount of 400 rand that was actually only for next year. So what we need to do is we need to take it out. We take it out by taking it, just putting it on the other side. And that is why we are crediting. That is why we are crediting the expense. Okay, so just to give you an idea here, this is question 3. Question 3, if they give something like this in the exam, it'll take 2 hours to complete. Okay, 115. So it's very good practice, but they won't ask it in so much detail. So it's very good practice, but it's not, you won't get